How's it going, fellow traders? Magic Trader here, and this is your CFTC report data and weekly Forex analysis for gold and all the other major pairs as well as oil. So let's start by taking a look at gold. So what have the institutions been doing with gold? Well, recently they increased their long positions from 269,000 to 275,000. At the same time, they also increased their shorts from 88,000 to 94,000. Now, this is taking place as price was rallying up here. Now, we were expecting this rally in price because we know that institutional demand is currently in play. Okay, so institutional demand came into play, and this is where they were going to start pushing up price. Now, if you take a look at what the retail traders were doing down at this low, they were in long here. They started to push price up, the banks did, and then when they failed to continue the move upwards, retail traders got out of their long positions and they switched to shorts, thinking that it was going to drop like this. Well, in our school, we were telling all of our members, do not get in short. It's not the time to be getting in short. We are focused on longs because that is what we're seeing the banks are getting ready for. Okay? Not only did we get this conclusion by looking at their positions, but we also knew that by looking at the charts, this is what we were dealing with. So again, we saw the institutional area of demand come into play, and we knew that it was very likely that they were going to continue price to the upside. So we're starting to see that now, and we're going to be watching it for a continued move higher. We're waiting for the chart to signal long, and when it does, we will be joining in with the banks to take advantage of that move to the upside. All right, next we have oil. So oil is just sitting here, removed some supply. We got new supply created on the chart, so we got to be very careful about going long. I'd also be very careful about going short because we know that oil and the Canadian dollar tend to move with each other, and so by looking at the US CAD, we can see that we're expecting some Canadian dollar strength. So if the Canadian dollar gets stronger, we're likely to see a push up here. So looking at the data, do we see any reason to believe that the banks are going to start pushing price up? Well, we can see that since their last reported positions, long positions were at 643,000 and they boosted them up to 650. So that's pretty decent. They're increasing their long positions, but is that quite enough to get price to go a lot higher from where price is now? Well, I wouldn't say it is. We are watching to see if they're going to start building momentum, but the first thing we'd need to see is them remove this supply zone there that they created on the chart. If they remove that supply, then we have another obstacle up here. Okay, this is major supply. We don't want to go against that. So in order to take some long trades, some meaningful long trades on oil, we need to see these areas of supply get taken out, and so far we're not seeing that. So we're staying away from oil at this time. Next we have the US dollar. We mentioned in the EURUSD report that we were expecting this area to be taken out, and that is what took place. More downside is what we are expecting. And if we take a look at the positions, what do we see? We see that they decreased their longs, which is good. Okay, reduce them from 26 to 24, and then they increase their shorts, which is exactly what we would be expecting to see if they were indeed going to drop price. Okay, so I will let you know that we did have an institutional area of demand here that's been removed, and if you take a look at the chart, there's nothing to stop price from dropping even further. All right, and we believe that over time we're going to be seeing this weakness with the dollar. If you look at the other dollar pairs, they have very similar chart formations, and they're all pointing in the direction of price dropping even lower. Alright, so next we have the Aussie US dollar. So the Aussie US dollar is a little bit interesting because what we have here is we have a massive area of demand that price came down, and it's been contacting it for quite some time. The thing that I will point out, and I pointed this out before, is the retail traders were getting in long here. Why? Well, because they saw this big rally up in price and they thought the banks are going to be buying. And at that time they were buying. That's why price rallied up as hard as it did. But without a good understanding, I should say, of the supply and demand dynamics that were in play, you would recognize that this is the worst time to be getting in long, which is right here, because we were interacting with many different forces in the markets that were going to be pushing price down very, very heavily, which is what has been taking place here. So the retail traders, they were getting in long right about here, and they were right at that point to get in long, and short-term longs would have worked. But then price started pushing down, and guess what? Retail traders are now getting in short here, okay? Which is the wrong thing to do, because if you take a look at what's taking place on the charts, we are seeing a lot of evidence to suggest that we are going to get a push up here on the Aussie. So you got to be careful with that, because all the evidence is pointing to a stronger Aussie. Especially when you look at the Aussie pairs, we're seeing a lot of evidence to suggest a stronger Aussie. Now, if you look at the positions, they closed off positions from 64 to 56 long, and shorts, they also decreased them. So why are they decreasing longs as price is rallying up? Well, that is a little bit of a mystery, but there's not always an answer for every little thing that they do. The bottom line is you've got to take a look at what the sentiment is, and it's somewhat neutral. Okay, a little bit of bearishness, but somewhat neutral. So they could be doing a lot of things here during this time, but what we are definitely seeing is very strong evidence to suggest that price is going to be heading higher. Now with the US CAD, this is a good one, okay? Because if you take a look, I posted on Twitter what the retail are doing right now, and the retail are getting in long, I should say. I was just about to say short, but that's not true. They're getting in long right here, okay? Because they are making the assumption that price is going to do that. Every time price makes these wicks to the upside, they're luring traders to get in long. And you can take a look at the sentiment of retail traders. They're very much long. We have been short for quite some time now, and we've profited on some short positions as price was heading down here, and we've entered into some swing trades, and we're holding them because the expected move is a move down like this. Now, why are we expecting that? Well, there's many things that are happening on the charts that would lead us to suspect that. But one thing I will point out is if you take a look at the positions just recently, you'll see that what did they do? They closed off long positions from 45,000 to 40,000. Okay, that's a big reduction. All right, and at the same time, what do you see with shorts? 48 to 53. So now you're starting to see the weight shift, okay, more heavily on shorts. Reducing longs, opening up shorts. What do we have here? Look at the sentiment. The sentiment is somewhat neutral. Look at this slight bearishness starting to come in here, okay? Look at these numbers building up. These are net positions. -5, -6. Now look at this big jump from -2 to -13. That's a massive jump, okay? So all the evidence is starting to point in our favor, which is for a move lower, and it's very clear what we're seeing. I pointed out with the dollar how we're seeing evidence to suggest a move lower. We're seeing the same thing with the U.S. Japanese yen. We're also seeing the same thing with the U.S. Swiss franc. Okay, so let's move over to the U.S. Swiss franc, and what are we seeing here? U.S. Swiss franc came up. It fell short of hitting the institutional supply. Why is that? Well, because the banks were coming in and shorting the dollar. Okay, so the dollar hit supply, causing price to drop. Now we're seeing the big decrease in price. We are expecting more downside on this chart. Right now we got to be very careful because the positions here, the sentiment is neutral, okay? So it's not very clear in either direction. They were bearish here, then they're turning a little bit bullish, but the sentiment is neutral. So they're not very strong in their conviction with positions on this one here, but this one's slightly increased in longs, this one's slightly decreased in shorts. Not really strong with their conviction with their positions, but that's okay because we have a lot of evidence to suggest that more downside is going to take place. One thing I will point out here is if you take a look at the weekly chart, we have an area of demand right over here, and this will need to be removed first. Once this gets removed, then we'll have the ability to short with targets down here. Once this is removed, even further and even further. Okay? So now let's take a look at the euro. What is going on with the euro? This one's been a really good one, okay? Because again, if you look at the sentiment of retail traders, they are short. Again, against what is taking place on the charts. We knew that it was very likely price was going to be heading up higher. Why? Because price was contacting a major area of demand, which we knew the banks would be buying from. And so that is what's taking place. But of course they had to lure in retail shorts before they could do that. Okay, so now what are we seeing with their positions? Take a look. Increase in longs, 190,000 to 197,000, and look at this massive decrease. Okay, massive decrease in short positions from 123 to 116,000. They are just getting ready. They are just getting ready. Take a look at this. They used to be really bullish down at the lows in demand, and then they reduced them. Okay, those that have been looking at the COT reports would have probably been looking at these numbers saying, hey, it doesn't look like they're so bullish anymore. But we knew that this was just a setup, just to lure in retail traders to short so they can get in long. And now look at the big jump here, 66 to 80,000. That's massive. Okay, so we are expecting this to continue to the upside in the weeks and months to come. Pound is holding this weekly trend. Look at that trend line. It's holding very nicely. And what do we see with positions? Again, aren't we seeing the same sentiment here? We are, because look at this. Increase in long positions by the banks, 52,000 to 61,000. At the same time, they slightly increase shorts, but look at the coloration of the shorts here. These cells are blue because their positions are cooled off. They don't hold any importance to us. But if you take a look at here, you can see that they are getting aggressive with their longs, which means they're more focused on long positions than they are with short positions. So we got the nice bounce from the weekly trend line, and we are expecting over time for price to continue higher. Now we got the US dollar Japanese yen. Remember I told you US dollar pairs we were looking at weakness? Well, we knew price was going to drop here. Why? Because price was contacting some supply here. Okay, massive supply was on the charts, and that's why we were expecting price to drop. A lot of opportunity to short here, and there was a lot of traders shorting here, part of the community making some nice profits on this big drop, because this is exactly what was expected. Look how accurate that was. Hit the supply and then a major drop to the downside. And so if we take a look at positions, what do we see? Anything that sticks out? Well, we see that they slightly increase longs and they slightly decrease shorts. So not much in terms of conviction here, and at the same time they're also showing a sentiment that is bullish. But in time we believe that this will be switching, and you can obviously see that that is what's been taking place on the chart. Now, last but not least, we got the Kiwi. The Kiwi, we are expecting more upside. We got major demand in play here, and we are expecting more upside. So demand came into play. Now you see the upside come right into the charts, the bullishness, right? And what do we see with the positions? Isn't this the same thing that we see with the euro, US dollar, and the pound? 19 to 21,000? Yes. And they're not really doing anything with shorts. Building up longs, okay? And so look at this. A little bit bullish, went into more neutral territory, but we're slightly going into more bullish territory. So over time we do expect price to continue higher. We do have some obstacles that we have to deal with here, but once those are taken out, we will see price head even higher. Alright, ladies and gents, so if you want to know how we do this, how we draw our supply and demand, how we use the COT report to greatly assist us in locating the direction of price, you can reach us at www.whiteoakfx.com. Come join. We got thousands of students. We got a lot of members that are learning from us, and we'd like to see you there too. All right, take care. Until next time, we'll talk to you later. Have a good week.